What is up, team? All right. Happy Monday to you. After a somber weekend, I feel like the somberness of the weekend and just what comes from September 11th, remembering that and reliving all that stuff, that I feel that somberness has continued into today, and rightfully so. And I'm okay with that. I'm okay with that. If it's the case that that's how it needs to be every year, or that's how it's going to be, that's okay. It's important we never forget what happened. Most importantly, I think, how we came together afterwards. I think that was the real beauty of what took place in that time, that we can take the one thing that we can take positive from such a hugely negative event. And today we'll talk about, there's a lot of talk about taxes. Hey, listen, there's no secret here. Joe Biden made it very clear he believed in higher taxes, and it's typical, politics. Republicans believe in lower taxes, Democrats believe in higher taxes, more redistribution of wealth, etc. So no surprises here, right? And now we got this $3.5 trillion infrastructure plan that's been in the works, in Congress for quite some time. And how are we going to pay for that? There's two different ways. Money printer, go brr, or they come up with legitimate ways to say, well, hey, let's increase taxes. Let's do this. Let's do that. So Derrick Evans here, VA Home Loan Specialist, NMLS 155010. Let's take a look at some of these things and let's talk through this. Okay. So first of all, here's what I'm talking about in case you haven't seen this. Inside of this tax proposals, capital gains to 28%. Long-term rate 25%. So that's what the House Democrats proposed, a top federal rate of 25% on long-term capital gains, according to the legislation issued Monday by the White House Ways and Means. The top rate would be 28.8% when combined with a 3.8% surtax on net investment income. So 28.8% for capital gains. Just seems like the number. I mean, here's the thing about taxes. They just seem to always go up. Even the Trump tax cuts were temporary. It's like you can't get a permanent reduction in taxes. There's two ways to pay for stuff, team. You either become more efficient, right? Like if you want to buy a house and you really want your payment to be at $3,000, but the houses you like are at $3,500, you have two options, right? You can make more money or you can cut from your budget, something that you're spending money on. It seems to me like the government just always wants to try to make more money, which means come scrape more money from us, which is really unfortunate. Now, the big question, though, is will this impact real estate? And that's what we're going to take a look at today. Mostly, these taxes are for top earning individuals. Here's an interesting article. Top earning New Yorkers could face 61.2% combined tax rate under House Plan. Californians, 59%. Now I remember when, we were doing taxes and like if you paid 30 or 40% in taxes, it was like crazy. Now we're talking about not just half, but well over half of what you make going to the government, which is, similar. There's a lot of countries that are like that, and in those countries, the government handles everything. You get healthcare, you get this, you get that, you get whatever. It's all handled through the government. We don't quite have that yet. So if we had that, then we'd be talking about higher taxes. But I think really it just feels like it's the goal of politicians just constantly, continually come into your pocket. Some people won't be affected by this, by the way, but people who earn good W-2 income definitely will. Okay, the details here. So I got that one in there. I'm going to get that one into the link as well. That one just kind of shows you the rules, contribution limits, beautiful Roth conversions, a few different things here. So let's talk about taxes for a second. So if you see an increase in taxes, this also, by the way, is a good explanation for why we saw this. Dow's up 260 points today, but had a 5-day losing streak. What was the 5-day losing streak about? I think it was, again, the big boys who knew what was coming down the pike from this proposal was higher taxes. It spooks the market a little bit. It does. It spooks the markets a little bit, especially when you're talking about capital gains tax or long-term capital gains tax. Hey, these are people who are investing in stocks long-term, hoping to get favorable tax advantages as a result. Really, truthfully, the best tax advantages are in real estate. They just are. The fact that you can eliminate capital gains tax up to $500,000 if for a married couple, $250,000 for an individual. Contact your CPA for specifics for your situation. I'm not a CPA. But the fact that you can get hundreds of thousands of dollars in capital gains free as long as you live in the home, I mean, that is 2 out of the last 5 years you got to live in the home. That's massive, 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 massive. The fact that you can depreciate, the fact that you can write off your expenses, the fact that you can write off closing costs, points. And when you sell, you can also write off improvements that you made. So you put $100,000 into the home, you have the receipts for that. You can write that off against the gains that you get for tax-free purposes. So there's just nothing better for taxes than real estate. It's not even close, and they're going to make it even more so. So here's the big twist today. You guys ready for this one? These tax hikes, especially on long-term capital gains, these tax hikes make people want to buy real estate even more. They do. It may cause softness in the stock market. We've already seen a little bit of that, right? Because investors go, oh man, taxes, dang it. People always get mad about taxes, and people don't want to pay taxes. Of course, nobody does. But we got to. The question is just how much can you minimize it? Well, what's going to happen is a lot of people who've made a ton of money in stocks, I think, will rotate that money to real estate because it's just going to be a better safe haven for the money. It just is. Even if you buy a home for purely investment purposes, you're getting a tremendous amount of tax advantages for doing so. Because when you own a home, you can write off the interest. But when you live in a home, your primary residence, you can write off the interest and you get the capital gains when you sell, if you've been there for at least 2 out of the last 5 years. But when you buy an investment property, now you're getting to write off everything you spend money on. So not just the interest, okay, but everything. Everything you're spending money on is a write-off. And you'll depreciate it. Now, you may have to recapture that, but then, the 1031 exchange. The 1031 exchange allows you to then take that gain that you have and transfer your tax basis to the next property. You just have to choose one in 90 days. I do want to do a 1031 exchange interview at some point. I'm doing interviews in studio tomorrow. I have some great people coming in. We're going to be releasing a bunch of really good content over the next 4 or 5 days. I'm going to do some incredible stuff with regard to selling a home in San Diego right now, the Bayfront project in Chula Vista I've been talking about forever. Kevin M is going to come on. We're going to talk about that. He's got that completely dialed in, has details about it. I've been telling everybody, West Chula Vista, in San Diego, is the only place in the entire county where it's less expensive to be west. Think about that. It's less expensive to be close to the ocean. And now they're spending over $1 billion to develop that area right there in that one spot. Yeah, West Chula. I mean, I've been telling people this for years, and I know the prices have gone up there a lot recently, just like they have everywhere. But I'm telling you, that is going to be a great spot to be. If you have a long-term outlook and you don't need great schools right away, it'd be a great place to invest. So let's take a look here. So we see the Dow's up. So what I was saying was that, hey, we're seeing a little depression here. Bonds sort of flat. Oil back up to $70. Gold still under 1,800. Crypto got murdered at the end of last week and over the weekend, I believe. But still, you 45,000. So mid 40s for Bitcoin, above 3,000 for Ethereum. Still holding on to almost 3,300 there. There was a weird Litecoin thing today, which I think was bizarre. I don't understand what happened there, but it spiked. It doubled at one point and then peeled all the way back. So there was something weird going on with Litecoin. I don't have enough information on that today to really talk about it. But when you look at these different investment opportunities, first of all, there's a lot of money out there. What you have to do to really understand, I talk to a lot of realtors, okay? And what you have to do to really understand how much money there is out there is you have to talk to people who are selling big ticket items to folks. And I talk to a lot of realtors. And so in talking to a lot of realtors, I have gotten a good feel for how many people are out there with insane amounts of money. There is a tremendous amount of people with insane amounts of money running around out there, and a lot of them are investing in real estate, as they should be. I think you're going to see more people who have been sort of on autopilot with stocks, maybe some other investments, are going to want to get into a better tax safe haven, and there's no better one than real estate. So when we look at all of these things, aka taxes, higher taxes, combined tax rates in California and New York are going to be 60% or more. Additional taxes for people who have investment gains, or what we call capital gains. This is going to spur people to look for better investment opportunities. And no matter where you go, I don't care if you Google it, DuckDuckGo it, talk to your CPA, it doesn't matter where you go, everyone's going to tell you or ask you, how much real estate do you own? Do you have anything invested in real estate? You're going to need some real estate. A good CPA will tell someone they know. They're doing their taxes. Hey, you're renting, you're making six figures. What are you doing? What are you doing? You're missing out on major tax benefits. So, and I haven't seen this, so I don't know if there are any attacks on the real estate benefits in these plans. I haven't seen any yet. But assuming that there isn't, this will all be very beneficial for real estate. It may not be great for the stock market. It may not be great for other types of investments. It could be good for bonds. It could be. But they're not great tax havens. Bonds aren't. But it could be good for bonds, but just by proxy, if stocks get hit a little bit and people want to park their money in bonds for a little while they figure out what to do next, buy real estate. So that's what we're going to see. So if we get this, and if I'm right about further lockdowns coming, then I think you're going to see a very, very strong finish to the year for real estate. So just know it's all about numbers at the end of the day with investors. People will go on feel and people will go with what works. A lot of people have money invested in stocks now, not necessarily because they know what's going on or because that's where they would choose to put their money if they had it in their pocket right now, but because it's just what's worked. It's worked. If you've been invested in stocks for the last decade, why would you change anything? It's just like people who are curious about selling their home, but they're not doing it. Why? They feel like they're getting paid to wait. And how can you argue with them? Well, should we sell this month or should we wait till next month when it'll be worth 20 grand more? I guess we'll wait till the next month too. It'll be 20 grand more than. I mean, that's kind of the mindset that goes on when people are seeing an asset go up and up and up. They don't want to sell it. They don't want to get out. And we've seen that with stocks. We've seen that with real estate. And I think the big beneficiary of higher taxes from an investment class standpoint is going to be real estate. So there was a couple other things in here I wanted to point out. This is a really good article. I'm putting this one in the description because I want you to read this and share this one with anyone who tells you that there's a wave of foreclosures coming. There's going to be a crash in real estate. I like how they say a foreclosure crisis is unlikely. Really what they're talking about is a crash caused by foreclosures. It goes into details about forbearances, and I've made videos on this myself, and we've brought data to you. So here's just some confirmation. Diane Olick, typically not bullish about real estate. I know it's crazy because she's a real estate reporter for CNBC, but typically not bullish, giving you some real information here, some real data. There's great stuff in here. You can get a whole bunch of, the equity position right now. There's so much good data in here. So I'm putting that one in there for sure. This I thought was interesting. Data shows that COVID booster shots are not appropriate this time. U.S. international scientists conclude. This is a peer-reviewed journal at The Lancet. Very interesting. This comes a week before the Biden administration says it plans to begin offering the shots to the general public. What are you talking about? The shots have been offered to the general public. You can walk in anywhere and get a shot. I don't know where you can't get a shot. Where can't you get a COVID shot? It's very interesting. FDA advisory group will be meeting Friday to discuss data to support the wide use of boosters. They're also working on a vaccine for children 5 to 11 years of age, because I think right now they just want you to do it if you're 12. My daughter's going to get the shot because she wants to travel to Mexico with a friend and their friend's family, so she's getting a shot. Listen, I don't know. I don't know enough about it. I've never been a shot guy. I'm not a needle guy. I don't take vaccines for the most part. I got chickenpox when I was a kid. I got COVID. I get sick. I get stronger. That's how I want to play it. Other people may want to play it differently. That's totally fine. Listen, my uncle is an emergency room physician, has been for, 30 years. He says the vaccine's cool. He's researched it. He says it's cool. There's a lot of varying thoughts on this, but I thought this would be interesting to also add into the description if you want to read up on this. There's some interesting things in this peer review. And, I like reading these peer reviews because you're getting people reviewing their peers, it's a little bit different. It's like this really honest sort of environment where people, it'd be like if me as a loan guy, if I was reviewing work that someone did on a VA loan, I would give them serious criticism, right? But I would try to do it in a constructive way. That's why I like the peer review process in medicine. That's actually really, really good. And so this is something that's worth reading. This is a polarizing topic right now. A lot of people are dead set on many different things. And, I'll agree that I don't have any idea what's in that syringe. And for me, that's a no-go. So some people are like, cool, I trust them. I trust the docs. I trust this. Hey, my own uncle, that's like a genius that I have known for my whole life, was like, yeah, you should take it. It's fine. It's good. I've done the research. I've read everything on it. It's legit. Okay. For some people, that's enough. For me, I don't like needles in the first place. So I got COVID. Hey, I had to deal with it. 2 weeks of hell. And it was not good, but I should have natural immunity now. So we'll see how that goes. All right, guys, enough about COVID. Let's talk about the markets. We're looking at real estate taxes, and we're looking at higher taxes. How does that affect real estate? I think it helps. That's my story, and I'm sticking to it. You guys have a great day, and I'll be in touch again soon. Take care.